What's up everyone, Dylan here. I wanted to hop on and do a video going over my current market outlook. In this video, I'm going to go over recent price action, and I'm also going to go over where I expect the market to head next based on my analysis. So with that said, we'll hop right into it. So as you can see on my chart, I have one line drawn. It is the key 4286 level, which represents my line in the sand on a higher time frame analysis. Meaning, above that line, whether you like it or not, bulls are technically in control. Now, that does not mean that price cannot pull back above there. However, what it does mean is any pullbacks that occur above that 4286 line on the S&P 500 futures basically means that it has a better chance of getting bought. Okay? So, a quick rule of thumb, when you have an uptrending market, long setups tend to be higher probability. Okay, so taking the market long, right, buying, expecting price to go higher. On the flip side, when you have a downtrending market, short setups are deemed as higher quality. Okay, so I wanted to make that clear before I go on. So as I said, this 4286 level acted as a tough resistance for several months leading up to the beginning of this current month, which is June of 2023. As you can see, right, we see that it acted as clear resistance in September of 2022, and then again in February of this year, and then two more times right there and right there earlier, basically like a month ago. Okay, so once price broke above that, it managed to rally a whopping 5% in just a few weeks, which is that's a good size rally to say the least. Okay, so like I said, technically above 4286, the bulls are in control, and anytime you want to short above that line, it could work. Don't get me wrong. However, it is deemed as lower probability. So as a trader, you have to think of the market in terms of probabilities, right? You want to have a good idea of, whether the setups you're taking are deemed as high probability or low probability, because then once you have that idea, you could figure out, how many confirmations you want, what position sizing you want, what your risk to reward is going to be, and so on and so forth. So essentially, as I mentioned before, the market is in a clear uptrend, especially over the last month, okay, ever since price broke above that blue line. Okay, now recently in the last week, the price has gone down. Okay, so I'm going to go to a weekly chart, and you can see that the S&P 500 futures had 5 consistent green weeks, right? 1, 2, 3, 4, 5 consistent consecutive green candles on the weekly chart. However, this most recent one closed red. So it was the first weekly candle that closed red out of the last 6 weeks. And a lot of people are out there saying, oh, this high from last or 2 weeks ago is going to be, the turning point, and that's going to be the high for the rest of the year. Could that be the case? Yes, it could. I cannot rule that out. However, in terms of just probabilities, that the bears do not have control yet, in plain English. Okay, so any dip that we get above this blue line has a better chance of getting bought. Okay, now if price continues lower and breaches below that 4286 level, that would kind of transition the ball from the bulls into the bear's hand. Okay, and once if and when price gets below that 42.86 level, then you could expect that any pops are going to get sold into. So any rally you see below 42.86 has a better probability of getting sold into. Okay, that's very, very important concept to understand. Okay, so not only do I have that 42.86 level, but there's another key piece of context that I am using that is giving me the idea that bulls are in control. So I wanted to go over something that I look at. I've been looking at this tool for the last 5 years, and over that time period, it has helped me tremendously. So the market made its high, its near-term recent high on June 16th. Okay, so that's a very important reference point to keep in mind. Going into the VIX futures, okay, the volatility index futures. This is what I've been looking at for the last 5 years. I'm pretty good at when it comes to analyzing the VIX futures compared to the S&P futures and how they kind of correlate with one another, how they diverge one another, and so on and so forth. So using that same reference point that we just looked at in terms of when the S&P made its near-term high, like I said, it was June 16th, okay? This is June 16th on the VIX futures. As you can clearly see, I'm using a 15-day, 1-hour chart that shows the last 2 weeks in the VIX futures, right? And you could clearly see that it is downtrending, okay? This key context that I'm about to go over is very, very, very important for where the market will head next, in my opinion, okay? So let's go over that right now. So, as I mentioned, the market made its recent highs on June 16th, okay? Since then, the price has managed to come off 2.5%, okay? So from the recent high on June 16th to current price, right, wherever price closed this past Friday, it has come off 2.5%, okay? In theory, when the S&P 500 comes off 2.5% in 1 week, the VIX should at least move sideways or up, okay? That's what should happen in theory. However, what has actually happened is price has continuously moved lower, okay? What that means is that there is a divergence in what VIX should do and what it is actually doing, okay? Considering the VIX technically should have either held around 17 or headed higher towards that 18 level, but it did not. What that means is the S&P is likely to bounce near term, okay? In other words, what that also means is it is unlikely that this downward move in the S&P 500 is going to continue lower. Very, very, very important context. So using those two pieces of context, one being the VIX weakness relative to a 2.5% down move in S&P, and the fact that it's still above that 42.86 line in the sand key support level that was recent, or not recent, but that has acted as resistance for the last several months. Those two pieces of context make me believe that there is going to be a bounce soon, okay? Now, it is up to you to figure out, where that bounce is going to occur, and I'm going to do my best job in coming up with that area in the Investitrade Discord. So that's it. So hopefully this video was helpful. Hopefully you guys have a good understanding of how I use the VIX. This was just one example. I have tons of other examples of how I use the VIX in correlation to the S&P 500 futures. But all I'm saying is be careful trying to short the S&P 500 futures if the VIX continues lower and if the S&P 500 is above that 4286 level. Could shorts work out? Yes. However, you have to understand that any shorts above 4286 and as the VIX continues to head lower is deemed as lower probability. And that's it. Have a nice night. Peace.